we're back on Mike Coscarelli Rules. I love that you guys are still with me after 4 episodes. This is great. We're running out of time. Maybe 5 more left. I'm talking out of my ass right now because I'm a little bit nervous. And the reason that I'm a little bit nervous is because I'm about to talk about something that I am extremely bad with and extremely uneducated on. And my next guest is very smart and knows a lot about this stuff. She's the host of Morning Brew's Business Casual podcast and author of the Business Casual newsletter. Kinsey Grant, welcome to the show.
Well, thank you so much for having me, Mike. I am very thrilled to be here. 4 episodes in and hopefully 1 million to go, not just 5 or so more.
I guess we'll see how it plays out. Thank you so much for being here. I really do appreciate it. Obviously, we were talking before we started recording. Please be gentle with me. I don't know anything about any of this stuff that's going on. Obviously, I'm a fan of yours. I listen to the podcast, and that's sort of where I try to get my education from. And I read the newsletter as often as I can. It's all such great stuff. You know, if you're one of my listeners, definitely go check both of those things out. But so the audience can get to know you a little bit. If they're my people that might not know you, you're really young. You're 26, right?
Yes, I am.
Okay.
Reluctantly so.
Reluctantly 26? Would you rather be older?
I don't know. I think I would rather be 23 forever. It was a great age.
Yeah, naturally. I mean, who wouldn't want to be young and be able to make crazy young person mistakes all the time?
Yeah.
You know.
I think the thing that has gotten me lately is I'm not getting carded anymore when I order a drink at a bar.
That'll do it.
And it's really getting at me in a soulful way. But
yeah, that's
for another podcast.
That's definitely a moment that sticks out in your head. Is damn it, I think I'm starting to get old. Well, so being that you are as young as you are, you kind of aren't a traditional face of finance media. I'm assuming that you hear this a lot, but you have a very refreshing take on this stuff because even if you listen to the podcast, the way you speak is young. You don't, it's not, I don't get the vibe, you're extremely informed and you know what you're talking about, but I never get the vibe that you're trying to be stuffy or be an older person. And I think you usually think of finance people as sort of for lack of a better description, old white guys in suits, so you're different in that way. I'm wondering what kind of expertise how did you get your expertise? Because to know all the stuff that you know at a young age, I mean, are people receptive in your world to sort of your spin on this stuff? Clearly they have to be, but I'm just curious, how did you get to where you're at such a young age and know all this information?
Well, I would say, number one, a lot of luck. I've been very, very fortunate to be in the right place at the right time at several points in my life. So that does not go unnoticed or underappreciated in my book. Luck is a huge part of it, but I'm also a firm believer in the harder you work, the luckier you get. So, spreading out your likelihood for having something good happen to you is a result of hard work. So that's kind of my platitude that I'll give you before I kind of get into the nitty-gritty of it. But I appreciate that you said that we approach this in a different way than most traditional financial media personalities might approach situations put in front of them. And that's by design. We at Business Casual and at Morning Brew more broadly, I would argue as well, believe that finance news and financial analysis and knowing what's going on in the stock market and understanding what a short squeeze is shouldn't just be for a certain kind of person. It shouldn't just be for an old white dude. It should be for everybody because business affects all of us. The economy affects all of us. The decisions that these powerful people are making affects all of us. So how come we can't all be empowered to understand what's going on? So that's the thinking that we brought into creating Business Casual. And I think it's really been a useful guidepost for us and a North Star for us in a lot of ways, because why would I go in and pretend to be something I'm not? I'm 26. There's a lot I don't know. I read a lot. I write a lot. I Google a lot of things. I ask a lot of questions. Yeah. But at the end of the day, there are just things that you can't get with experience. You can't get without experience, but it shouldn't prohibit you from asking good questions. And that's been really, really important as we build the show. And as I get these crazy, powerful people on to interview them, what the hell am I going to ask Mark Cuban? But you figure it out because he's human. I'm human. Everybody has natural curiosity, and allowing that to flourish has been a huge part of our success, I would argue. Now, where I get my information in the first place, everywhere, I would say. I started my career working with those like stuffy old white dudes, writing for them. I was covering the stock market for a company that Jim Cramer owned. Like it couldn't have gotten more buttoned up.
Yeah, my dad's favorite.
I just got
everybody's
bored.
dad's
like
favorite. Yeah.
When you're writing or creating something for somebody who's so far away from where you are in your life, eventually it gets really, really exhausting. And I got to that point. Suddenly this incredible opportunity where I could have accountability and be creative and speak the way that a 26-year-old actually would speak came into my life. And it's been sick.
Yeah. I mean, that to just like to relate to you for a second, I used to actually produce Larry Kudlow's radio show. This was years ago at this point because he's been working for the president for a while. But I would have that same sort of feeling that I think you were having when you were working for Kramer, where it was like, I think you seemingly must have soaked up more of the information because obviously, you know, you're in this field of expertise now. Where when I was working for him, he would have so and so on, and then I'd feel like it would go like in one ear and out the other. And because part of it was it just felt like this level of exclusivity that I couldn't relate to because they were, you know, the older stuffy guys. But I also at that time, I was working in radio, I didn't really necessarily have an interest in the financial world at all. Have you always wanted to go down this road? Because I have to imagine you have some sort of like formal education in money or business or finance. Am I wrong?
A formal education in money sounds great. I cannot say that I have had one.
Damn, that is very surprising.
Yeah, thank you. I'll take that as a compliment. I had spent most of my young adult life, and by young adult, I mean the ages of like 15 to 21, thinking, so very young adult, thinking that I would cover politics. That was always going to be my plan A. I wanted to be a political reporter. I was like the exact stereotype of wanting to be the next Christiane Amanpour and like cover all these stories that were changing the world and like go be on 60 Minutes. And that was my game plan. I was going to be a politics major. I was going to do journalism, and I was going to move to DC. I did that for a summer, moved to Washington, hated it. Absolutely hated it. Just was not happy there. Couldn't really find my spot there. Got really disillusioned with covering politics in general. And at this point, I was still in college. So I still had the luxury of being able to completely change my mind. And that's exactly what I did. I had to take a business reporting class as part of my journalism major. And it really just kind of opened up this whole new world for me, where suddenly I got really excited by math, something that I had avoided my entire life at like any cost. I hated it. And suddenly it became exciting. It became something I could digest, and these numbers I could understand because I was seeing the human impact that they had. I was living in a small town in the middle of nowhere in Virginia when I went to school, and seeing that even the decisions of the Fed could impact these people who live in a town of 7,000 people was really, really eye-opening to me. And that was when I decided to become a business journalism major, which I guess is the closest I've gotten to a money education, if you will. And then I, interned for Bloomberg and did the whole business thing and learned everything I could about the stock market and took a bunch of econ classes. And it has kind of snowballed from there into this obsession now with covering this space. And I have kind of figured out that what I'm doing, while it is certainly a specialty within the journalism space, I cover business and that's what I like to do. I have found that it is far more of a general interest than it is a specific space I cover. Business really does actually affect everybody. Like these stories affect everybody. There's always a business angle. You just have to find it. Sometimes it's easier to find it than it is other times, but it's always there. And that's a comfort, but also a challenge.
Yeah, well, I get that. Since you have been in this world, have there been things that have surprised you now that you're an insider? I mean, realistically, you're a whiz kid. It sounds like, given like everything that you've just said, that you've been like kind of thinking that you were going to be on a path similar to this since you were 15, because that's amazing and impressive. But since you've been involved in this world, have there been things that surprised you, or is it sort of what you were expecting it to be?
It's been a decent mix of meeting and challenging my expectations. In a lot of ways, I have been able to experience some really, really cool firsthand stories of people and the human aspect of covering something as large. And, it's a behemoth to be a business reporter. There's so much to cover. But at the same time, some of those expectations that I had going in have been reinforced by being in this industry. it really is an exclusive space. This is, like business in general is the exact result of the decisions made by very few people, not very many people. And that can be a little disconcerting now and then to recognize that for so long, the thing that I have decided to devote my life to learning about and writing about and talking about is not for everybody. Just I can say that in the same breath of having said this affects all of us, but we're not all the ones who are making these decisions, and that can really, really suck. But like, it is the old white dudes who are making the calls more so than I maybe expected going in. You hear that, but you don't really understand it until you see it firsthand, and you're like, oh my God, everybody looks the same. They all have the same accent. They all went to the same schools.
Yeah.
The F am I doing?
So you were expecting it to be a little more diverse.
I had hoped it would be. And I say this as somebody who, like, I have come from a place of privilege. Like, I've always lived on the East Coast. I went to a good school. I got an education, and you go in thinking like, well, maybe it won't be quite as bad. And then you're like, it's exactly what they told me it would be.
Right.
Terrible. Everybody's the same.
Ah, man. Well, you brought up an interesting point, saying that basically the people that the people, but I don't want to say, I caught myself when I was about to say, but beneath these sort of like old white guys making decisions, it seems like last week finally got involved and tipped the scales a little bit and did something a little crazy. We're talking obviously about this. I'm just putting it in my notes as a GameStop fiasco because I don't really know what else to call it.
What else are we going to call it?
Yeah, exactly. But I realized after this whole thing had happened and I tried to read about it or whatever, I tried to explain it to my stupid roommate who was asking questions and clearly hadn't read anything about it. And I started trying to explain it to him, and I realized that I also didn't know anything about it. I was like, you're an idiot, man. Come on. How do you not know what's going on? And then I was like, well, this thing happened, and then this guy did this. And I'm trying to like put it into words, and I realized that I don't even really understand what happened. So as somebody that covers this, can you just give us a recap of exactly what happened? Because I feel like it's something on the internet that everybody seems to be talking about and knows some of the buzzwords, but doesn't fully know the story. Yes,
I will try. So,
all right.
To begin, I think it's worth pointing out that this really is like the definition to me of a double-edged sword. It's so awesome that everybody cares about what's going on in the stock market right now. People who have no idea what a short is or like what an options contract is are now trying to figure out what it is awesome. Like, that is perfect. That's what we want to happen. But at the same time, it opens the door to this whole crisis of like miscommunication and misunderstanding that can be dangerous because people are playing with money. So I will give a brief rundown of what happened. Essentially, it was exactly that, a fiasco. There is this Reddit subreddit called Wall Street Bets. I had the founder, Jamie Rogozinski, on the podcast in March, which was terrible timing considering how important his role has become in the last couple of weeks. But this subreddit is famous for people boasting about big bets that they're making in the stock market. They're often retail investors, people who are just kind of day trading for fun. They don't usually come from a finance background, and they boast about making these huge bets, these bets that are talking about like tons of money, and often incredibly contrarian. So they try to find the patterns that institutional investors or these big banks and hedge funds and what have you find the bets that they're making and figure out whatever the opposite is. They want to be different. They want to do something risky, and risk is the currency that they deal in on this subreddit. So with that all in mind, there is a specific Reddit user called, am I allowed to curse on this show?
Yes, absolutely.
Okay. Deep fucking value.
Okay.
And he essentially created this whole thing, like from essentially day one. He pointed out that this stock, GameStop, or now that they're calling GameStonk, that GameStop was incredibly undervalued. So shares were trading at a price that this one Reddit user deemed to be unworthy of the fundamentals of the business, that it could trade for much more. Around this time, shares were, I think, roughly close to $20, not worth a whole lot. And for obvious reasons. GameStop is very much the antithesis of a modern business. It relies on in-person retail traffic. They've been kind of slow to adapt to e-commerce trends, but they had this new board member who was supposed to come in and change everything. He was from Chewy.com. He had a lot of retail background and e-com background. And so they thought, this is the next big move for GameStop. This stock is undervalued. Then this huge snowball effect happened. The deep fucking value got everybody to buy in on GameStop. The share price soared. And at the same time, we realized that all of these big hedge funds, so these big institutional investors who are dealing with scale that retail investors like you and I would never understand, were shorting this stock. Shorting it essentially means that they expect the price of this stock to go down. They're betting against the share price. When that share price does go down, shorts win. They get money. They make money off of that. So they're betting against the future of this stock price. When the stock price shoots up, something happens called a short squeeze. So these shorts have to buy up more shares of the stock to cover their positions, which then in turn, of course, because of supply and demand, sends the share price even higher.
Right.
So this is exactly what happened with GameStop. And this is what we have now come to identify as a meme stock. So these stocks that are identified online as possible, these possibilities where people can get behind them and the price will shoot up. And we can kind of like tell the rich people to go fuck themselves, like eat the rich kind of attitude. And that is exactly what happened. These hedge funds were losing so much money. And in the case of one hedge fund, Melvin Capital, we're talking like $3+ billion lost because a bunch of retail investors decided to buy this stock. It got to the point where it was above $400 per share from $20 per share when all of this started, which is absolute insanity. And now we have the conversation shifting from go buy, this is crazy, to hold the line. I'm sure people have seen that on the internet. Hold the line, line. Don't sell yet. If you sell, the rich win, like the hedge funders win. And we don't want that to happen. It's been this really, really weird kind of like revolution happening online.
Yeah.
And it's been cool to see that this is, cool from like the third party perspective of somebody who just likes to observe these things. It's been cool to see that there is power outside of these hedge funds. And this, I think, has been really illustrative of how the power has shifted in recent months and years. And I say this all kind of with a grain of salt, though. At the end of the day, hedge funders are really, really powerful still. The people who shorted GameStop are going to lose money, but at the end of the day, probably not lose everything because they have covered their asses in other ways. This is just one holding of what is a very, very diverse portfolio for most hedge funds. So while it is really incredible to watch and to see that people are banding together to like stick it to the man, I don't know how much staying power it has. And that is my long-winded explanation of what kind of happened with GameStop. I
think that was perfect. I was trying so hard. I'm like listening. I don't know if you saw on the Zoom. I'm like, my eyes are going up like, oh yeah, okay, that makes sense. I got it. So I think you kind of hinted at it a little bit, but as a professional, somebody that has like an expertise in this field and works with or has context in this field, when you see this is happening, because I'm assuming I didn't really know about this stuff until at earliest the day after the market closed and this was like a national story. But I imagine that on your Slack or your whatever you're doing, there's a lot of messages going off like, do you see what the fuck is happening with GameStop, whatever. As you're seeing this unfold, what's going through your mind? Like, do you have strong opinions on it, or were you just like, this is insane?
I would say having spent some time on Wall Street Bets when I was prepping to make an episode about it almost a year ago at this point, I didn't pay it much mind. This happens a lot. They are, not at this scale. This was in the early days. I was thinking this happens a lot. They identify these stocks, these like mega users who have tons of followers on Reddit will identify something. It'll go up for a little bit. It might catch wind on other parts of the internet, but usually it stays within that subreddit. What really kind of became the turning point for me with GameStop was when my parents asked me what was going on. And I was like, oh, fuck, like this is going to be big. This is going to be a big story when it has made its way to like what my parents would consider like.
That's always the rule.
Media, right?
Yeah. Like, so if they're not famous until your parents know.
Yeah, it was everywhere. And I think that these subredditors, these Wall Street bettors, or however we want to identify them, have shown that they can do it on more than just GameStop. We have AMC and other stocks that they've identified, like the price of silver. All of these different aspects of what we would call, quote unquote, the market have been kind of manipulated by small retail investors working at a large scale together. So we see that manipulation happening all the time from these big institutional investors who are like talking about billions of dollars in assets under management, to see that it could happen with these smaller retail investors where it's maybe like a 20-year-old kid putting $150 into GameStop shares. But if that happens at scale, it can actually move the needle pretty meaningfully. It has been like a crazy case study. I mean, I saw a tweet today, like this is going to be a movie on Netflix. I'm sure this
Easily.
is going to be a bunch of podcast series, not even just episodes, but full series and books and all of this stuff. Like, this was a paradigm shift.
So then why, if you're saying that stuff like this does happen on the reg, because you're saying until your parents had said something to you, you were just like, well, whatever, this is like not necessarily uncommon. Why exactly was this one that much more, have that much more weight?
I think because it happened at such a massive scale that we're talking about like billions of dollars in market moves happening pretty instantly. And with such a quickness, I think that you often wouldn't see if you like tried to get like the masses involved in anything. Rarely can everybody agree that they're going to do something ever, but like
for sure.
For some reason buying
even
GameStop
wear a mask
shares
or, you know,
like we can't, exactly. We can't get people to wear a mask. We're like, no, go put some money in this completely ridiculous stock with a company that doesn't have any fundamentals that support this share price. That's what we should do. So, I mean, that I think was pretty meaningful. And also we can't ignore the context of all of this happening being the pandemic. Like people, like people are bored. And then that's the honest truth.
Interesting.
I mean, we've been at this for a year. People may not be able to like go to the office, or maybe they can't make the sports bets that they're used to making.
Right.
Maybe they can't go to sports games. I know that's a common comparison that's made, that like we're taking our appetite for risk that we usually would put out into the world in like
Celtics.
a public facing way. And we're applying it to the stock market. And instead of saying, I'm going to go like hit on someone at the bar and take a risk, I might get shot down, we're saying, I'm going to go bet on this stock because what the F else am I going to do? I don't have anything else going for me right now. Like, I'm just going to take risk here because I can do it from home.
Right.
And no one's going to stop me.
Does the fact that it was too, because again, going back to my stupid roommate, the other night he was sitting in his room laughing, and I was like, what are you laughing at? And he goes, it's just so hilarious, man. Like, AMC, the movies have been closed for an entire year and their stock just like tripled or whatever. Like, he was understanding the context of how like, does the fact that the stocks that went up to this type of height, the fact that they're just in essence ridiculous given everything that's going on, does that also, because this is really a troll job at the end of the day, isn't it? Yep. Or are we just like, am I seeing that through a very like elementary lens?
No, that's exactly what it is. Hedge funds are being trolled by people who are on Reddit.
It's like an $8 billion troll job. Yeah.
Yep. I could have explained it like that. That would have been so much more succinct.
But the details were so necessary, because I mean, this whole thing is absolutely it is hilarious, I guess. Like, I keep wondering if it's something that I should be like laughing at or like afraid of, because the other aspect of this is that Robinhood at a certain point, I believe you still can't trade the stock, right? Or you can trade it in small quantities.
Yeah, they paused trading for a number of stocks on Robinhood's platform. And the important part about the whole Robinhood aspect of this conversation is that, number one, it's called Robinhood for a reason. Their whole premise is democratizing investing. They want to steal from the rich to give to the poor. Yeah. They have the ability on Robinhood to sell people fractional shares. So let's say you want to buy a share of Apple. You don't have to buy all, however much it's trading, like $1,000+ of a share right now. You can say, I want to put $20 into this. Mm-hmm. You'll get a fraction of a share. And that's a way for people who might not have access to a ton of capital to get involved in the stock market, to invest, to build those compounding returns that we have preached for so long now. But for Robinhood to say, actually, you can't buy this right now because it's too volatile, really, really struck a chord with people. They were like, who's behind this decision? Why is this out of like the middle of nowhere? It feels like you hit us, like you blindsided us, because a lot of the traders who were investing in GameStop were people who were buying fractional shares. It was people who are investing on Robinhood or similar apps because they might not be able to afford, a couple $100,000 of, investment in the stock market right now. They're buying these smaller shares. They're buying at small prices. And for Robinhood to say, actually, you can't right now, felt like really, really visceral for a lot of people. There were some pretty obvious reasons why Robinhood had to do it. I think this is more a crisis of communication than it is a crisis of like, should everyday people invest? But that, of course, is not how the story shook out.
But may I ask, because you were mentioning, Robinhood trying to regulate volatility. Again, this is my ignorance. Does E-Trade or are all of these other places where you essentially, if you have more money, I assume that's what you're using to trade stocks, at least, again, dumb brain. That's how I'm thinking about it. But do they regulate volatility going the other way? If it's big time banks or hedge funds that are essentially sort of doing the same thing? Because from my understanding of it, it does seem like the reason why this is also such a huge story is because it's like a hedge fund finally getting their asses burned in a big way by a bunch of idiots. Well, not idiots. I don't want to like, make fun of them because this is just a hilarious story, but like regular people, one of the first victories financially where like the people, finally beat a hedge fund. And it just seems like that doesn't necessarily, I know the SEC, there's insider trading. It all gets very complicated, but does Robinhood have that responsibility to regulate that volatility? I'm truly ignorant to whether or not it works both ways. Does it?
Yeah. So the reason, I'll get into it in a second, that Robinhood had to pause trading is like basically to cover its own ass, which I can explain in a second. But in terms of volatility, it's hard to over communicate just how huge the scale was of the investments that were happening in just, let's say, GameStop specifically. It was crazy, the amount of money that was being put in. The most exchanges on which these stocks are listed have certain things called circuit breakers. So if a stock hits a certain volatility level at which the market starts to pay attention, they will pause trading on this stock on that exchange and say, let's give it 15 minutes, let everybody cool down, and then we'll go from there. There are certain like circuit breaker levels that you can reach after like the last one, and then they're like, all right, you're cut off for the day.
Okay.
This is too intense. This is too insane. And that's in an effort to preserve some sense of calmness in the stock market, because often we see these kind of, like chain effects of one stock moving. And then if it's in this ETF or if it's in the Dow Jones Industrial Average, like there are like effects that can happen to other shares down the line. And we don't necessarily want that to happen, because typically a share price wouldn't move the way that GameStop has unless the company did something. Like if Apple put out a terrible earnings report, right? Like then maybe we could see why a share price would shift dramatically. But for GameStop, it was just like out of nowhere. It was something that people just decided to do. And there are really no fundamentals to back that price up. With Robinhood, it felt this responsibility to hit pause on trading for a second, because, and I say for a second, for a while, because essentially when you buy, for several seconds, when you buy or sell anything on Robinhood, it doesn't immediately happen. It immediately happens on like your interface on what you're looking at on your phone screen, but that trade isn't settled for usually about 2 days. So Robinhood has a certain amount of money that it can use that's liquid to cover these trades. Suddenly it was facing this influx of orders that it wasn't sure it could cover, because at the end of it, it's still like it's one platform, right?
So
it's used
Robinhood's a loan shark.
In a way, but so is every exchange, right? Every
I had no, but this is what I'm saying. I don't know if regular people know that. I had no fucking idea that. I thought Robinhood was just sort of the go-between between the market, which I don't even really know. It's sort of like this nebulous. Yeah. Does it like what is it like theoretical? Roulette table, I didn't realize that the money had to be lended for the transactions to be made.
Right. And Robinhood and other platforms, they have like somebody who executes their trades for them, who makes sure that these actually happen. This is the platform that we trade on, that people who use Robinhood, that we trade on. But they're not the actual ones who are like, yes, sign on the dotted line. This trade happened and I can account for the money, and here's where it came from and here's where it needs to go next. That's not their responsibility. So they had to pause to make sure that they could maintain responsibility over those executions of all these trades that were happening really, really quickly at a massive scale, that really kind of like overwhelmed them in a way. But I think the interesting side of, the interesting side of this story is that suddenly this story wasn't about GameStop anymore. It was about Robinhood having been loyal to the suits, not to the everyday people. People were saying that Robinhood was being bought by these hedge funds, that these hedge funds were like, if you stop trading so that we stop losing money, we'll make sure that your next funding round is incredible. We'll help you with your potential upcoming IPO. We had people who were saying that this was like the work of the government, saying that Robinhood couldn't let trades happen on its platform, which is all like not I don't know. I can't make the call. I haven't interviewed Robinhood CEO, but I do think that they lost a pretty meaningful opportunity to reclaim that narrative and to be open about it, because a lot of other platforms also had to pause trading on these shares, but they were just a lot more communicative about why and when people could expect their money to be, their chips to be back on the table again, like theoretically. But Robinhood just didn't do a great job of that.
All right, and I guess if you're Robinhood and your mission statement in a way is sort of like empowering the people, that is sort of a damning PR narrative to have out there. Because I truly thought that that's what it was too. I was sitting here, I was like prepping for this interview, and I was like, how dare Robinhood mess with the people? The people, yeah. Unbelievable. But now, I really don't think that. Maybe I'm just like. But I really don't think that that's common knowledge that Robinhood is like lending the money and needs to, and not just Robinhood, but all of these traders have to actually make sure that they have enough capital to make this thing go.
It's almost like a run on the banks, like
yeah, right.
This is what happens. You have to make sure, like, while all of this does feel really theoretical and like all of it is made up money and like nothing matters and there are no rules, there actually are, like, somewhere there's like a piece of paper that keeps track of all of the shares of GameStop and like what they're worth at all times and who owns them.
Right.
And we lose track of that sometimes because we're like instant gratification, a highly digital world. But at the end of the day, like the actual mechanics are still pretty basic, like the ways that they work and the ways that people take money and use it and then deploy it in a different way and then borrow it from someone and then expect to get it back. There's a lot of moving parts, but they're all pretty basic.
Understood. All right. Well, you've done an excellent job of explaining that. So you had mentioned the narrative sort of getting away from Robinhood there and how other traders have really had to do the same thing, but communicated it better. And it seems like I don't want to like blame this internet troll, again, nebulous, like one type of person, mob mentality. But with that narrative getting away from Robinhood, and obviously a lot of heat came down on them for all that stuff, because that's what became the narrative in the news. Do you think that the internet trolls in the financial sector are finally getting like a real voice? Are people on Wall Street actually afraid of something like this happening again? Or just the idea that this could be, they might perhaps be losing control of something that they kind of had a system for in the past?
My hope is, yes, this will open the eyes of the institutional traders to the power of the everyman, like to the power of the retail investor. When these retail investors band together and say, like, we're coming after you, Steve Cohen, they can actually make good on it, is pretty cool. Like, that's awesome for somebody who is like not one of these powerful people. To see that that's possible is awesome. I do, though, have my doubts about whether or not this can be replicated. Like to the earlier point about the times in which we're living right now, the word of 2020 was unprecedented for a reason. Like these circumstances are difficult to replicate and nobody would want to replicate them. So I'm not sure in the future, in like the post-COVID world, will this happen again? I'm not totally sure. And I still think that we're, right now as we're recording this, it's still very much like a hold the line kind of a mentality with GameStop. I don't think the story is over by a long shot, which is crazy and exhausting, but
for you, I bet, yeah.
yeah. But I mean, I think they've paid attention. These institutional investors have paid attention, maybe more so than they usually would, but they have a lot of ways and a lot of capital behind covering their asses in other ways. The GameStop short is one of many, many investments that these hedge funds are making. And not all of them are making it. Like where one hedge fund might lose $3 billion, another is making $3 billion elsewhere and just not getting the same attention. So the story is not over, but who knows?
Do you think that there might be regulations that come after this in any capacity?
No.
Okay.
I think. And I say that with like a little bit exasperated, like to face a situation in which the likes of like Elizabeth Warren and Ted Cruz are kind of in agreement that like this is a little fucked up and maybe we should look into it is crazy finally we can be united on one thing, but
Yeah.
regulation is slow, and regulation fails to recognize like how fast we as the people being regulated move. So while this might be the story of the week right now, and it might story of the month, who knows, story of the season, by the time regulation is actually passed down, I have my doubts whether or not it will actually do anything. And that's just like a symptom of our, bureaucratic functions of the United States. And like, we can get into that, but it's not easy to make regulation happen. And also the people who are actually making the decisions, like in the room, don't want it. They don't want it.
For sure. Yeah. I would imagine that. I would think that the only reason that there would be any sort of motivation was because, a couple of hedge funds got burned. But if you're saying that this is something that is happening pretty much on the regular, then I guess this isn't as earth shattering as I think that a lot of people seem to think it was. Am I right about that? Like, it just seems more like it's like the story is just juicy and funny and silly. And
I think that the thing is, like, manipulation has always happened. The markets are inherently capable of being manipulated.
Yeah.
It's just who's doing the manipulation that is so interesting about this story. It's usually these bigger institutional investors who are deciding what happens. And now it's not them. They're the victim of a system that has long made the little guy the victim, the everyman the victim. And now there's been this role reversal, and it's uncomfortable, and it's weird, and it's fun for us to watch as members of this little man community. But I think that's the story, is that it's who's doing the manipulation instead of that it's even happening. It's always going to happen.
Got it. Well, that's the GameStop fiasco in a nutshell for you folks. I have a couple Bitcoin questions, because there's another thing. Bitcoin, obviously, everybody has a friend who has a little bit of Bitcoin. They're usually, conspiracy theorists. My friend Mike is the one that tried to get all of us into crypto. He's like, dude, come on. This is the wave of the future. This is like 2 years ago. We all lost money. None of us knew what the fuck we were doing. But obviously Bitcoin is back. Why is it back? How did it come back?
Oh, it's a great question. How long do you have? I think
plenty of time, Kinsey. How long do you have?
I think if I had to boil it down, it would be another one of these, like, read the room, unprecedented kind of times where things that we would never expect to happen are happening pretty regularly, and we have to come to terms with that. And part of doing that is investing in other things like Bitcoin. And the big argument for Bitcoin bulls right now is that it's an inflation hedge. So we have the government spending huge amounts of money in stimulus. And I have argued openly, like, necessary stimulus. $2 trillion was nothing. Like, we all got our, like, Donnie T bucks, right? And then what happened? And then a year later, we're still in this situation. The government needs to step in. We need to help people. But when you do print that much money, inflation is a kind of necessary evil that follows. And a lot of people are concerned about the purchasing power of the dollar and the ability of the federal government to step in and say, what are we going to do about the purchasing power of the dollar after we passed all of this stimulus and people got all this money? How can we fix it? And the question is, can they at all? So that is why people right now, at least the loudest voices in the room, have been pro Bitcoin and pro crypto, because it is an inflation hedge. There's a finite amount of Bitcoin that can be mined in the whole world. And that lends itself to a little bit more stable purchasing power. Stability is not often a word used when talking about Bitcoin, but at least in terms of purchasing power, we're pretty sure that, there's only so many places it can go.
Okay. Are you bullish on cryptos in general?
So
even if it's not specifically Bitcoin.
Advice, but I will say, and I don't give investment advice, not because my employer has, like, deemed it irresponsible or anything, but just because, like, I am 26 years old, like we were talking about, like, what the fuck do I know? But
a lot.
I do think that I'm more bullish on decentralized finance in general, which essentially is just like, when we think about central banks, that's the epitome of centralized finance, that the Fed chairman, Jerome Powell, can make all these decisions and tell you what interest rates you're going to pay. And who knows how he's being influenced. That's a big question mark for me. The system has certainly worked well enough for long enough, but the pros of decentralized finance seem to kind of outweigh the pros of more centralized finance. So nobody really owns the future of Bitcoin. This was written in a way that can't really be manipulated. And I find that pretty compelling. So I'm bullish on, as they call it, DeFi, but I don't know about these individual cryptos themselves. There's just so many of them that it's hard to figure it out.
Dogecoin, which is the dog crypto, had a big spike the other day. Unbelievable. I was telling you about my friend Mike and our friend Julian. Julian works for the MTA. These were the guys who were like, dude, you got to get into crypto. I drive the train around the city. I know. All right. I'm a finance guy. So we obviously, everybody and, all of my roommates, all of my friends, we are all just like, we kind of let Julian and Mike become our like financial advisors for maybe a 4-month period of our lives in 2018, whatever. And obviously we all lost whatever we put in, which was not much money. Let's be serious. But with that bubble bursting and now it's come back, what's to stop it from bursting again? Is there anything?
No.
Okay.
I mean, the nature of a bubble is that it's going to pop at some point, and you have to be prepared for that. Oftentimes we can't recognize a bubble until after it has burst, which is unfortunate and usually leaves a lot of people unhappy for many reasons. But I wonder if Bitcoin itself actually is a bubble. We heard that word a lot, especially in 2017 when we had this first major price run up to like $20,000 was the top for Bitcoin. And I was covering then. I was like, what the F? Like, there's no way that this can support these prices. There's just no way. And now this last year it topped $40,000 and insane. It depends on who you ask. It could go to $500,000. I'm not necessarily sure, like at what point can we say that these individual spikes in value and like the price of Bitcoin, and then it'll come back down to earth, and then it'll kind of chug along, spike way back up, and then come down, and then it's chugging along a little higher than it did the last time. I don't know if they're necessarily bubbles. I think the inherent value is there for me. I know a lot of people say it's not because it's not something you can hold, but like, can you hold the dollars in your savings account? I can't.
Good point.
I don't have a safety deposit box, so I can't. It just is like, has kind of sent me on this like meta journey through how we assign value to things, which is crazy. Like someone decides it's valuable and we listen to them. Why can't we listen to the people who say that Bitcoin is valuable? Yeah,
I mean, makes sense to me.
Yeah.
All right. Last thing, and then I'll let you get out of here because I know you're a busy lady, you got stuff to do. And I know that you said you don't give investment advice, but I'm going to ask you to give investment advice.
Perfect.
I have a little game. It's a quick rapid fire game. It's called Buy, Sell, or Come On.
Okay.
They're general, so they're not like specific stocks or anything like that. They're more trends that you might be seeing, or that something you might have a gut instinct about. Buy obviously means you buy more of the stock. Sell means you sell more of the stock. Come on means, what are you thinking, dude? Like, avoid it at all costs. Now, this is an interesting time because given everything that just happened with GameStop and Amazon, like I didn't know that GameStop, which seems to be closing on every city block in New York City, would ever have some sort of resurgence the way it did. So maybe there's a surprise in store that I don't know about, and that's why I'm asking you about it. All right? So you know, you understand the rules, buy, sell, or, but if you say come on, it's got to be come on.
Got to say it that way.
Okay. All right.
Got it.
Food industry stocks, buy, sell, or come on?
Can I ask a follow-up question?
Yeah, for sure.
Do we have like a specific part of the food industry? Because
I didn't think that far ahead.
Sorry, I'm a reporter.
All right, let's make it specific. Let's say like a food supplier, like U.S. Foods. I know they send food out. People buy, I guess, in bulk from them. I think that's right. I don't actually know.
Yeah.
Sell. Okay. Retail stocks.
Buy.
Okay. Energy stocks.
Clean energy or traditional energy?
Let's say clean.
Buy.
Buy. Wow. 3. Real estate stocks.
Come on.
Really? Our first come on.
Yeah.
Okay. Is there a reason?
Do you want to go back to an office?
All right, fair point. E-gaming stocks.
Buy.
Okay. Travel stocks.
Sell.
Damn.
Yeah.
All right. That's the end of the game. Short
Oh
list.
gosh, that was nerve-wracking.
You did a great job. Kinsey Grant, you are a star. This could not have gone better. You were so good. I feel informed now, and I clearly was not before we had this conversation.
Well, they were great questions for somebody who says they were uninformed. I appreciate it. That was really fun.
Great. I'm glad you had a good time. Where can people find you? What do you want to promote? What do you want people to hear, see, listen to, read?
So the podcast I host is called Business Casual. You can search for that on any listening platform. I am a big Twitter user, so find me on Twitter at Kinsey Grant. And if you want to subscribe to the newsletter that we were talking about, I write, it goes out every Sunday. It's businesscasual.fm/sign up.
And I highly recommend it. It's in my news box every Sunday night. I love reading it. Kinsey Grant, you've been awesome. Thank you so much. I appreciate it. All right, guys, I will see you guys on Thursday. I got Gene Getman coming back for another Social Villains episode. So until then, goodbye.